Welcome back, everybody. Welcome back. Hey, how you guys doing? Sorry, camera's back, new kind of adjusting back to that. I hope you all are having a fantastic day. We are going to be joined by Tim Ord today. I know he was on yesterday, but luckily just so had it that some pretty intense stuff has happened today. Of course, you had the new tariff list roll out. We're going to talk about how they basically arrived to those numbers, because it is kind of strange. And obviously you can see right now, I mean, the SPY is trading off 4.0 shots. Oh man, look at that. So the tariffs hit us so hard we can't afford to share the screen anymore, guys. I'm sorry. No, I'm kidding. All right, let me get that live. Okay, so you have the SPY trading at 541.80. Listen, I mean, I feel like, you know, this is definitely a big gap down, and it is on some volume. And I mean, you know, you're trading back to these September levels, right? I mean, don't get me wrong. I mean, this is from our high here in February down here. I mean, this is a tough move, right? And I'm still not very convinced this economy, bar tariffs, is in a good spot. And I think you're seeing a positioning from big money in that way. Of course, we're getting the 10-year skyrocketing right now. You know, I still question the idea of lowering interest rates to a certain extent. I mean, these are getting close to the projected Fed fund of the end of this year, which is about 3.9. You're trading about 4.1 on the 10-year right now. You know, and so I mean, things like TYD, which is the 7-10-year Treasury Bowl ETF from Direction. I mean, you're up 3.14% in that. You know, and like. So luckily, like, I'm in cash for sure, and I didn't know which way this was really going to go, because I believe it probably could have been spun in a lot of different ways. I still think there's issues in the economy, again, regardless of the tariffs. You could still see price increases, and you can't really lower interest rates in that. Inflation is still somewhat strong. You have the composite definitely getting smacked very hard, off 5.23% at 16,681. And the Dow Jones Industrial trading off 13.35%. You're off nearly 1,600% earlier, 1,600 points earlier this morning. Quite the movement to the downside. And of course, the Russell getting the brunt of it off about 5.83%. The dollar is getting some ground back. I think we traded to a low today of around 101, 101.26 roughly. Crude oil totally getting smacked off 6.78%. Now, there is OPEC essentially is going to produce a lot more oil, right? So this is kind of like flooding quite a bit. So you're having some depression in that as well. But again, a lot of this is from the tariff shock. I think a lot of people probably anticipated him, you know, not to put these tariffs out, but he did. Let's talk about that a little bit. And yeah, guys, we're going to talk about Intel. I mean, Intel is roaring right now with some deals with TSM. Now, what I also found strange about this, to some certain extent, is that Trump says that the chips will not be a part of the tariffs. You know, I don't know. I think this, to be honest with you, I think this thing is changing by the hour in a lot of ways. Let's take a look kind of at how they're arriving at these tariffs, because in reality, what it is, if you look at it from the U.S. perspective, of course, it's a deficit to, it's essentially a deficit to import ratio, right? If you look at it from the other country's side, it's the surplus to export ratio, whatever it might be, whatever kind of way you want to spin it. That's essentially how they're doing it, right? And I want to pull the, oh, come on, man. Where is it? Here, actually, you know what? It's in the Discord, so we're going to do that. This is why Discord is so good. I'm going to pull up this equation just to go through it, because I think for whatever reason this looked very complicated, right? And it's not actually complicated, but the part of using Greek letters, I feel like, to be honest with you, I feel like that was them trying to kind of impress people a little bit, because it's not necessary to do that. And I know a lot of people were saying, wow, that's, you know, especially online, like, very complicated. These guys know what they're doing. In reality, it's a pretty simple formula. In a weird kind of way. Let me open the link here. See if we can get it. Okay. Also kind of not getting the delta because that's the change. But anyways, what this is the net exports, right, minus imports of the country. Okay, and then this is essentially the elasticity of imports. This is the pass-through for tariffs, right? And then this is over imports, okay? So it's kind of bizarre because, and again, and why I'm saying this is unnecessarily complicated, because these things equal 1. The value they chose for elasticity, and again, I'm not sure I understand why they picked these values, and they do reference papers for why they picked these values, but these essentially equal out to 1 for each other, so I'm not sure what the point of including it is at all. So this is going to be 4 they picked, and they picked 0.25 for the pass-through rate. And so all you're getting is exports minus imports divided by imports. You know, and so it's a very bizarre, and again, it depends on how you look at it. If you're from the US, you're going to do deficit divided. For another country, it would be the surplus over the exports, right? And you get roughly kind of the same answer for it. And then what they do is kind of just, I mean, if you take it from the other end, they're just dividing it by 2, and that's how they're getting the tariffs. It's very bizarre. So, and again, that's not really a tariff, that's just a deficit. And I was like, this is strange, it's not a tariff. And then I want to look at this picture that I have on my phone, excuse me, because I want to read out to you this, yeah, so you had a Congress guy say, tariffs are customized to each country, sorry, an administration official, because this is based on the concept that the trade deficit that we have with any given country is the sum of all unfair trade practices and the sum of all cheating. Okay, so that's an administration official said that to reporters. And it's kind of strange, right? Like, I don't know if you can necessarily use that as a proxy. I mean, you consider stuff with like Vietnam, for instance, that got totally hammered. What are they supposed to do? I mean, you either increase imports from the US to try to balance everything out, or you decrease exports. You know, it didn't adjust really for the size differences between the countries. And so it's kind of a strange thing. I don't know. And this isn't political at all. I'm not, you know, it was just a very interesting way of getting that number, and I'm not sure, you know, I don't know. I'm not sure how that's going to work out. Folks, Sarah, they'll be right back.